Hey friends, today we're exploring one of the most fascinating tools in technical analysis, the Ichimoku Cloud. If you've heard about it but never entirely understood, this video is for you. We'll explain the Ichimoku Cloud, why it's essential and how to use it to enhance your trading strategy. If you haven't subscribed yet, now it's a great time. Let's get started. So, what is it? The Ichimoku Cloud is a Japanese technical indicator developed in the 1930s by journalist Goichi Hosoda. You might wonder why it's not called the Hosoda Cloud. He published his work under the pseudonym Sanjin Ichimoku. People in the land of the rising sun often invent and name things using pseudonyms. This tool was designed to quickly evaluate the market, particularly trends, support and resistance levels, and potential reversals. Now, let's walk through the main components of the Ichimoku Cloud so you can understand how to read it. The Ichimoku Cloud consists of Tenkan-sen conversion line. This represents the average price over the last 9 periods and helps identify short-term market trends. Kijin-sen baseline. This shows the average price over the last 26 periods. It's a more stable trend line that provides insights into long-term market direction. The Cloud Kumo. These lines shape the cloud, forecasting future price movements. If the price is above the cloud, the trend is bullish, and if it's below, it is bearish. Chiku span, lagging line. This plots the current price shifted back 26 periods. It helps assess the strength of the trend. It is important to note that the Ichimoku Cloud provides its strongest signals on the daily chart. While it can be used on shorter time frames such as the 12-hour or 4-hour charts, the daily chart shines as it provides a broader view that encompasses several weeks' worth of market data. Now that we know the components of the Ichimoku Cloud, let's dive into how to use it in trading. Look at a classic trading terminal with a Bitcoin USDT chart. Scenario number 1. Identifying trends. When the price breaks above the cloud, it signals a bullish market. Conversely, the price falling below the cloud indicates a bearish trend. Here's an example with Bitcoin. You can see that the price broke through the cloud from below. This is a classic buy signal. Now let's look at the sell signal. Scenario number 2. Identifying support and resistance levels. The Ichimoku Cloud shows the trend and highlights potential support and resistance levels. For instance, if the price approaches the upper boundary of the cloud, like in this example, it could serve as a strong resistance level. The third scenario is when Tenkan crosses Kijun from bottom to top. It is a buy signal. When the Tenkan line crosses Kijun from the top to bottom, it is a sell signal. Now that you know what the Ichimoku Cloud is and how to use it, it's time to put this knowledge into practice. The Ichimoku Cloud is a powerful tool that helps traders make more informed decisions, especially during challenging market conditions. It allows you to see not just the current market situation, but also to predict potential trend changes. Remember, like any tool, mastering the Ichimoku Cloud takes practice, but once you've got it down, it will become one of your best allies in trading. Please like this video if you found it helpful and subscribe to the channel for more valuable content. That's it for today. See you in the next video.